Hey, what's going on YouTube? Let's start off with the dollar. Here is the 5-hour chart. As you can see the pattern, as it's getting tighter and tighter. Price is going to have to make a decision as it winds itself between the pattern. The price gets corkscrewed inside and has to make a decision up or down. Right now it's sort of a higher low, and pattern should pop above. Looking at the longer term, same difference. Our natural point of return is the 34 in and around 95, which is correlated to this previous low. So look forward to that. As I was waiting for weeks for it to fall, it looks like it's wanting to go higher, but as we speak today, it is open down. So, and yesterday's action was even more peculiar, as it came off this piercing bullish engulfing pattern. It opened yesterday and went all the way down, broke outside, and gathered its legs and closed all the way up. And now we're doing something peculiar as it opens down. But this could be construed as a hammer, even though we do have a wick. Hammers aren't supposed to have a wick, but it is pretty small. So there you go. We have two bullish patterns in candlesticks. We have the piercing pattern, and then now we have a knocking out the bottom hammer pattern on the daily. So we've got two reasons to see price rise on the dollar. Weekly, like I said, that price action sideways for 3 weeks now, waiting for it to fall. If it does fall, just look for a previous low, which 93.85 on this week's candle would be it. But Friday is tomorrow. Usually Fridays are pretty slow, and we'll see just what happens. Right now we're down. We opened down. We're down $13 or 13 cents. So S&P looks like we got caught in a little firestorm here. We got a higher low on a 60-minute, broke down, bearish retraced all the way to the 34, and broke down ever since. Here is a flag pattern, and now we're moving to fall again, maybe to make a double bottom on a 60-minute, possibly. But look for a previous low at 2078 to see if it goes up or down, if it can gather its legs or not. But right now it did a bearish flag into resistance, R8, and now it's backing off. This previous low over here would be significant, as the next lows would need to be to hold it up. That's 60-minute. Here you have the 5-hour, and you can see the last 15 hours has been down, and then now we have a consolidation over the 34. We'll see if this is a continuation pattern or not. And a daily, you can see the lower high on the daily, and it is at support. And then on a weekly, It's kind of got that falling star look to it so far, but this would need to close down further. So look for downfall on the S&P tomorrow. See if we can close a weak candle as a falling star. So this price would have to be coming down at least, let's call it this previous low or previous high here at 271. Another $11. See if we can make it. See what happens. Here's the Dow, and you can see that same pattern forming as it kind of lost its juice, and the bullishness of it came all the way down. If this comes down any further, you'd have to call it a falling star on a weekly chart. Let's just look at the earliers. There, and you have a reversal candle on a 5-hour, 60 minutes. You can see this bearish engulfing down to support, came down below support levels, and then bearish retraced back to the 8, and then it's fallen ever since. Here's a double bottom. Maybe look for price to come and smack on the Dow a bearish retracement back to the 8 or 13, as the 8 and 13 are crossing at the moment. But if it's bearish enough, sometimes that bearish retracement doesn't happen. Just like on gold, when gold was coming across and there was no bullish retracement. Just the opposite is here. If this is really bearish, there won't be a bearish retracement. It'll just keep falling. So keep an eye on that. Crude continues to be bullish after its double bottom, came across the 34, retraced back to the 8, and that was our bullish retracement. And then from there, it broke the previous high, and then it took off. This is a weekly chart. I believe that it is hitting into previous lows now, but look for a previous high tap at $50. So it's got a ways to go. It might take a couple weeks, but it needs to break into these previous lows to get to this previous high. All right, so gold and silver got knocked back pretty hard, but when you look at it, it's really not that bad. We were looking at gold yesterday, saying, watch the 1260 break, and it did. It broke. But as soon as it made it high, I guess someone out there threw a bunch of paper contracts, a whole year's worth of mining supply at the COMEX, and knocked this back pretty hard. But knocking it back, what is that, $20? Yeah, give me a break. I believe this is just another head fake. It's trying to juke the longs. So you're long, you're like, oh my God, I'm rich, and then they throw all those paper contracts on there, and the longs are like, oh, I'm out of here. So they're just taking care of longs, even longs that are been here, and then you look at this, it's like, oh, well, it could be a whipsaw, blah, blah, blah. But this is a 5-hour chart. On a weekly, I mean, it's right there. I mean, it hasn't done anything. They can knock it back even further if they wanted to. Hope they don't, because every time they do that, it just takes a long time for it to recover. But it's still in the pattern. You can see the break and then break back in. But the weekly candle is still bullish. It's still green. I mean, for the week, it busted out and came back into the pattern. So we're just inside the pattern for a week. Weekly. We want to see if we can get above 1260 for a weekly close. But it looks good. In my opinion, it's just a bullish retracement. It's just pop, and then it's someone sitting on the bid, taking out all the longs as they go down. Someone's on the bid buying shares, is what my opinion is. But everywhere I look, oh, this is the end of gold. Oh, you shouldn't buy it. It's a false breakout. Blah blah blah. This is going to 1,000. Whatever. It's not. It didn't do anything. It knocked it back $20. Give me a break. And with how many contracts? I mean, just it used to be when they threw some contracts at the gold, it didn't take that much to knock it back. Now it takes a huge amount of contracts, paper contracts, to knock it back $20. It's like, give me a break. It's not, the game is up. The rigging, the fixing, when you have to throw a whole year's of mining supply in paper contracts at gold to knock it back $20, your game is almost up. That's just the way I'm thinking here. We're still bullish, no doubt. Silver, they did the same thing. Silver broke out, and they knocked it back. But look at the week's candle. This is 1 week, from 16.18 all the way to 17.72. Went up $1.50 this week, and they knock it back to 17. It's like, oh, okay. And again, how many paper contracts did it take to throw it back? It didn't even throw it back 50% of the candle. So what do I say? It's still bullish. If it's still 50% of the candle, above 50% of the candle, it's still bullish for the week. And, that's a long green candle. They knocked it back to 17. Actually below 17, but it recovered. And now 17 is our support. So can they do it again? Sure. Why not? But what do we have? We have a reverse head and shoulders, a consolidation over the 34, and a breakout. Okay, a long-term breakout. This is a bullish market. I don't care what anyone says. It's a bullish. You can see these patterns all the time. How long before we get to 18? I don't think long at all. I mean, it moved $1.50 in a week. What's another dollar? I don't see any reason why we can't get to 1850, start breaking into these previous lows, and really do some damage on that monthly chart. And you can see that monthly chart, and this is where it gets good. This is where long-term charts are like the savior, and the reason being is that charge towards the 34 trend, and then it backed off. Now look at the month candle. For the month, under 15 all the way to 1776. I mean, really? 20 days, it's up to 17. What is that? I don't have a calculator. let's call it 15 to 17, $2 and some change. It's bullish. What I'm saying is right here that it broke out on a weekly and it went all the way up to the 34 on a monthly, tapped it and backed off. Now, what I'm saying is maybe some seller had its goal to hit the 34 on the monthly, and then he waits for it to bullish retrace all the way back as far as it goes. And in this situation, I don't think it's going to go down very far. So maybe he started to buy back at 17. But look how far we are from our goal. That's my goal right there. You think in 2 weeks we can hit that? I think so. There you go. So the reason why I'm so kind of adamant is because I'm reading all these comments from investor.com, all these like supposed professionals. Oh, that's the end of silver, blah blah blah, that's the blow off, blah blah blah. You said like whatever. Do you even know how to read charts? Like, give me a break. Anyway, this is ridiculous. The amateur chartist can read this chart, how bullish it is on a monthly. But do they read monthlies? No, they look at the daily and they're like, oh my god, that's the blow off. No, it's going to break this previous high right here, and it's going to easily ride that wick all the way up. Easy. That's what happens. Anyways, off to mining, gold miners. We're hitting into previous lows. We got knocked back a couple days ago, but it recovered very nicely. Still bullish. I don't know. This thing is so bullish. I mean, it's like on fire. That's a monthly chart, and you can see we didn't even come down on our knockback. We didn't even come down to the 8 yet. It got knocked back, and then it just continued. And that previous high right here is where we're at, and it looks like it's just going to bust through. So, wow, incredibly bullish. So we had the gap. I was thinking, oh yeah, it's going to fill the gap. No, it didn't even try. It just turned around and said, nah, I don't need to recover anything. That was just a hiccup. There it goes. Gonna go again. Well, tomorrow's Friday. We'll see what happens. We got this candle that's looming right now on a 5-hour, and that is a hanging man. So we'll see. Maybe we will fill that gap. But nonetheless, this thing's got some power. It broke down, recovered, and then the next 5 hours. So be careful tomorrow. The weekly so far is looking good, but we are at resistance from the previous high. But it is really resilient, and it's only the 5-hour chart that's making that nasty candle. So I mean, it's breaking in the previous lows. If it breaks into previous lows and consolidates, we could see 27. So there you go. Copper, bullish again. It recovered nicely. Did what it's supposed to do. We got a reverse head and shoulders, pops above the 34. It's got this step down, step down, step down, step down. It broke previous high. Boom, off to the races. Now, breaking previous highs on this pattern is the flat top break. We'll see if it can get there. It's a weekly chart. It's definitely bullish. It is above the 34, and it is pulling the 8 and the 13 with it. It already retraced, recovered nicely. So what I want out of copper is for this monthly chart to break into previous lows, so that we can reach our target at 2.8. Got a ways to go. The monthly chart is nasty, but on the weekly we're breaking out, which helps the monthly. This is a bullish pattern. Okay, that's a bearish flag, and it shows its stuff right there. This is different than these others. Here we had a reverse head and shoulders, but it reached the top as it broke in the previous lows and got stopped out, did a double top, came down, bounced, made a lower high double top, and just collapsed. So that was a good chance to break out. Just trying to look for bullish patterns on consolidation under the 34 as it makes a move towards the 34. We only see these on the long-term charts. Daily is too up and down, up and down. You can't really. You can trade the 34 on on the dailies. You can see the same kind of patterns forming, but just in longer term. That flat top break, you could have took it, lower high here. Let's take a morning star out of that. Yeah, sort of a morning star on that daily, and you could have took a ride on that, but I try not to trade the dailies because there's too much up and down action within the trend. The weekly is your trend. This is the trend break. So there you go. Also, platinum, palladium, we haven't looked at. That same kind of pattern right over the 34. And I haven't been paying attention to these two because they fell off the map. Especially palladium, I think it was, that was so bearish at one time. But the weekly patterns are coming off. Right now, palladium is breaking previous highs. Flat top break right there. I'll keep an eye on that. And platinum, flat top break right over the 34 on a weekly chart. Both of them. And how do the small guys get into this? Well, we got Sprott Trust is right now breaking previous highs. Flat top break off of it's a combination. Sprott's Physical Trust backed by palladium and platinum. So if you wanted to look into that, looks pretty good for a few weeks. Look for any kind of bullish retracement back to the breakout, which you got 20 to about 10 cents maybe. Maybe you can see this come back down. But there you go. That's it, guys. I appreciate all you guys. I'm getting more and more subscribers every day. So I appreciate everyone that's jumping on. And I hope you understand what I'm doing here. Just a chart, 3 lines and some candles on a long-term weekly charts. Just looking for reversal bars on intraday charts and following the trend. Make sure you stay with the trend. But yeah, thank you for commenting. I appreciate all the good comments. I hope I can keep up with you guys, making good calls. Like I said, I'm not a professional, but I used to spend 16 hours a day reading charts, finding patterns, and I guess it's going to pay off because you guys, you're getting the juice. This is good stuff. Um, I stopped trading for a while because the markets are rigged. If you're around long enough watching price action. But here's the thing about manipulation. The consensus is manipulation can happen on a day-to-day basis, but they're reading charts too. And the thing is, they cannot manipulate the major trends. They can only manipulate within the trend. So keep that in mind when you're looking at this stuff. Please don't listen to the news. Sentiment from the mainstream media is going to throw you off like no other. They do not want you to be on the winning side. They are for the bankers. And once you realize that, start thinking for yourself. There's a little meme on Facebook I saw the other day. It said, what did it say? If you hang out with me long enough, I'm guaranteed to make you think for yourself. And I totally agree with that, because if you can't think for yourself, then someone else is doing your thinking and you're going to lose. So I hope you guys are making some money. So far, so good on my account. I'm making higher highs this week, and that feels really good. Haven't made my mark yet, but it's getting there. Slowly but surely, I will. I'm hitting a lot of dingers, like singles and doubles. Once I get that triple and home run, you'll hear about it, and I'll be off to the races when that happens. But anyways, thanks for your comments. If you can donate, please do. Buy me some coffee. I would love it. And get yourself a Bitgold account, because things are changing. Whether the mainstream media wants to let you know how beneficial gold and silver are to your portfolio, it's going to mean a lot in the future. Guaranteed. All right, I'll see ya.